All right, welcome everybody. There's a whole lot to talk about today. Obviously, we saw even more corrective action and follow through to the downside with new catalysts, new tariffs, all of that. And today we're going to decipher everything in the stock market outlook video. We're going to cover market indexes, leading stocks, leading themes, what stocks are shaping up, are showing relative strength, and we're going to run through a ton of charts. So hopefully you guys enjoy this. Please leave a like down below if you do. It helps me out immensely. And subscribe if you haven't yet and want to see more videos just like this one every single week. Now, before we dive in, I do want to mention that this is the last opportunity this weekend. This is the last opportunity to try a free month of the Trade Lab. This is my newsletter service where I dive even deeper into market, analyses as well as case studies. Every single day, I put out my homework for the next day, covering the market indexes, leading stocks, leading groups. A lot of the stuff that I do, in video form every single weekend. I do this on a daily basis here for Trade Lab members. And in addition to that, I don't just cover current markets. I also have a in-depth education side to this where I cover case studies of model book stocks. We've done Tesla. Nvidia is going to be the next one, which I'll actually cover early next week. And I also cover regular educational concepts of, trading, whether it's a setup like the oops reversal, or recently just today, I put out how to trade a market rally, obviously very relevant to the current market conditions. And last week, I discussed how to trade, identify, and trade choppy markets, key adjustments that you should make during markets just like this to protect against downside like we saw last week. So this is something that I put an immense amount of time into. I really think it's extremely valuable. I get a lot of great feedback from members. And if you want to try a free month, again, this weekend is the last opportunity to do so. And you can learn more by visiting the link down below. With that said, let's go ahead and dive right in. And first taking a look at the QQQ, this is where we ended the previous week. We saw a big downside reversal bar undercutting this low, undercutting this range that we've been forming, breaking below the 10 EMA and 21 EMA. A lot of signs, to be more cautious. And, obviously you're probably getting stopped out of positions on this day. I know I was, the last ones I had, and protecting yourself from any further decline right here. Well, the next week started with a slight gap up, which is kind of the worst case scenario, to be honest, where we saw a slight gap up into the 21 EMA and then immediate, selling down, strong close, strong negative close, breaking below the 50 SMA as well. And the next day we didn't just see, more follow through, we saw even more follow through, undercutting the deep seek gap low, slight bounce. And then the next day we kind of had a consolidation day before on Thursday, really reconfirming down. I think there was some more tariff news on this day as well. And on Friday, we saw the first potential day of a rally, and we'll get into that in just a minute. But, just taking a step back, we've been in a significant uptrend for quite some time. We've really been in a correction since December 18, when the Fed put out a more hawkish stance, saying there'd be a reduction in future, interest rates, or there's less likely to be a reduction in future interest rates. And, since then, things haven't been quite the same. It's been choppy. There's been a lot of gaps up, gap downs. A lot of the stuff that I describe in detail in that how to trade choppy markets. You have to make those adjustments to, trade less, trade smaller, and just be a little bit more selective in this environment, because you can have gap downs like this and very strong waterfall selling, just like we saw last week. Looking at this correction in context, it's been going on for about 10 weeks now. This is the day one of a potential rally where we saw a strong move after an oversold reversal down. And now we're waiting to see, does this form higher lows? Does this reclaim the moving averages? Or do we just see fall through lower the next day, undercutting this low, which would invalidate this day one of the potential rally and suggest we need a lot more time to work this thing out. But we'll have to see. And what's kind of key here is how do we act here, not just in the market indexes, but also in the market leaders and growth stocks. And we're going to go through a ton of charts later today, walking you guys through that, because if this rallies, it doesn't really matter if the market leadership doesn't support it. There's kind of the index level view of a market rally, and then there's the actual stock point of view of a market rally. And really, market leadership has to confirm or even lead the market higher for a rally to be successful. So that's something I'm really watching carefully on. We saw a little bit of constructive action in my weekend scanning routine, and we'll go through those charts in just a minute. But, there's still more information required, to be honest. And we'll have to see what happens after this strong upside reversal day. But basically, this is something you should be prepared for. Given the sharp move down, I'm kind of always waiting for a gap lower and strong move up, or like we had here, a push lower, and then strong upside reversal up and a very strong close. And we'll have to see if this momentum follows through. Looking at the SPY, a very similar action, strong upside reversal here. We've been in a corrective phase since that December 18th day. And looking at IWM, this has been weaker overall, but we saw a similar strong oops reversal within the context of a very significant decline. This looks pretty negative and way below all those moving averages and below the 200-day moving average as well. And going back to the Qs just briefly, if we do undercut this low, I think a test of the 200-day is certainly in order. And even if we do, start forming a higher low, I'd actually love for it to consolidate a little bit, let that 200-day moving average kind of catch up to price and base against that before confirming up. Looking at this correction, it would be kind of more symmetrical if we do start forming higher lows and kind of build out over a course of many weeks versus just kind of unnaturally just shooting up and retaking those moving averages. I'd love to see a higher low form, the moving averages to kind of curl here, let the 200-day catch up from the bottom, and then move up from higher, move up from that point. That would kind of provide a better kind of stepping stone, launching pad, if you will, to propel the market higher. And of course, as I mentioned, leadership will be key. There has to be, a new group that leads us forward. Semiconductors did a lot of the heavy lifting the past 2 years. Software, really led the last leg up with PLTR really killing it, Reddit killing it, Duolingo acting well. But we have to see kind of where the puck goes now. And as of currently, and this is a perfect segue, what are the leadership themes right now in the market? And are they leadership themes that, will endure and we actually want to trade? Well, I've got my performance chart set up here in Deep View to kind of answer that. And very simply, to track leadership and rotation, I get this question quite a lot. I have this set up in Deep View where I've got a performance chart of the same watch list of thematic ETFs. So each of these ETFs represent a different ETF that represent, a certain theme in the market. So for instance, SMH is a clear one. If you hover over it, it's based on semiconductors and how they're acting. And I basically got the same watch list from a 1-day time frame, price percent change from the open. That's what's plotted here on the axis. And then here, price percent change over a 20-day basis. So this is kind of how it's performed over the past month. And then this is how these themes are performing on that day on Friday. And you can see most of them rallied from the open on Friday. But over the past 20 days, most of them, of course, have been correcting pretty significantly. And in order to find the leading themes, it's as simple as looking here on the right looking at what's performed best over the past 20 days. And what do we have? We have PPH, which is pharma. We've got KWEB, which is China technology, IAK, insurance, gold. So a lot of miners have been acting well, and utilities. And for me, these type of groups, when they're leading, that's not really the optimal time for me to be pressing the gas as a swing position trader, trading growth stocks. It's really when SMH is leading, when Hack is leading, software, when Robo's leading, iHack, SMH, even TAN can do really well. So it's when those groups that have, those quality market leadership, the ones that are, changing how we work, live, and play. Insurance isn't really doing that. China has its own issues based on the duration of trends and trusting the companies, and utilities, of course, aren't really disruptive technology. So this is a quick and easy way that I look to see what is leading in the moment. And then on a daily basis, I try to see what is developing leadership. And if I start to notice, IBIT, always showing up in the top here, then eventually it will transition over here and move up the ranks. And I'll just kind of be noting that strength as we go. And then looking within that theme, of course, that theme would be Bitcoin to see how it works. So for any ETF, if I start to notice it pop up over here over and over, I start watching it very closely. I'll dive deeper into that ETF, look for the strongest ideas within that. And that's how I kind of do top-down analysis to not only look at what the strongest themes are, but what are the strongest stocks within those strongest themes that are setting up currently and potentially actionable for trades. So that's a quick run through here. Again, the current leadership isn't really groups that I'm particularly interested in. Miners, utilities, insurance. Insurance actually has had some pretty good moves, but overall, these aren't the type of momentum driven ETFs that I like to trade personally. Looking at heat map, there's also a way to get a sense of rotation during the day. I like doing price percent change impacting the value, and then the size, the color is impacted by the size of the square is impacted by relative volume, and the color and value is impacted by price percent change from the open. This gives you a good sense of, what stocks are showing the biggest strength. And you can just kind of click one and it'll link up with this chart. And you can see PTCT had a very significant move from the open. And on a day like Friday where everything rallied, it's going to be a little less clear, but on a day where it's a deep red day like we've had, it's a great way to spot relative strength. And the insurance names were popping up here. Utilities, they were really standing out. So this is a good tool as well here in Deep View. All right, so we've talked the indexes. We've talked a little bit about rotation. I do want to run through the mega caps here. NVIDIA, of course, represents the semiconductor theme. And we had a big downside reversal after earnings here on Thursday. That, of course, was the big news that also helped the market lower on that day. But here on Friday, we had a nice oops reversal that ended the week on a constructive note. We're still below all the moving averages. And for me, as I mentioned before, this looks more like a stage 3 top where the longer term moving average is catching up to price. We've got these downside reversals to be aware of, a lot of gap downs, a lot of choppiness. But in the very short term, based on this close, I'm watching for continuation momentum here up through the 200-day moving average, but that's in the context of being below all the moving averages. So as we rally back into this area, I'll be watching for another downside reversal and a potential revival of the intermediate term downtrend. So that is NVIDIA, green shoots Friday, but overall still suspect. Tesla, pretty similar. We pulled back into the 200-day moving average as well as the low from this day right here. And what I'm watching for now is a rally into the declining 10 EMA and how it acts versus that level. And if it is going to break out of here and go on a nice move, it's going to have to make higher lows, break above the moving averages, and restart the uptrend. So there's no need, unless you're pretty aggressive and like to trade these type of reversals and mean reversion moves back into the moving averages. There's no harm in waiting for a higher low and for it to prove itself a little bit more. Right now it is in a down cycle. Just with one positive day, that doesn't change the overall intermediate term trend. Apple, big upside reversal here, good action closing near highs, and we'll see if it can fall through and push higher off these moving averages. Amazon, also nice action on Friday, but below the moving averages, and we'll see how it acts against these moving averages, declining moving averages. You can see the reversal down off the declining 10 EMA here, and we'll see how it acts on a potential retest of those levels. Meta, nice action, bounce off this area here from this prior consolidation. Good undercut and reclaim of this moving average of the 50 SMA, but again, rejected at the declining moving averages. That's what you're looking out for, and we'll see if we can finally pop through those and start to build the right-hand side of this base and higher lows. MSFT, weaker trend overall, well below the moving averages, and you can see again a reversal down off the 10 EMA, here a reversal down off the declining 10 and 21 EMA. So potential low in, and you can treat this low as kind of a significant low, but we have to prove itself and start forming higher highs and higher lows and get back above the moving averages for me really to be interested to the long side. Google, the last mega cap we'll cover here, a significant downtrend. We've got a gap down that started this. It's only been able to rally into the declining 10 EMA where it was rejected down and broke below this range as well. And again, we've got an upside reversal Friday, but in the context of a very significant downtrend, and it really has to prove itself before it can really start to base out and form a potential new uptrend. So that is a quick run through of the mega caps. It's a good sense to see how they're performing because that's where the big money likes to flow, big cap tech, and we'll have to see how those develop over the course of the next week if we do see a continuation up from the key low here on Friday. Now what I want to do is run through a few additional names. This is from my report that I sent out this week for the Trade Lab. First, looking at Reddit, you can see we're basing out against this former base low. Looks like constructive action, but again, we have to face off against those declining MAs. We're below the 50 SMA. So this just could be kind of the potential bottom of a base, and we have to start forming higher highs and higher lows and pop above that 21 EMA, which hopefully would kind of flatten out at that point. PLTR also, this was the leader when software kind of took over, a few weeks ago, but we've had a significant sharp break, but we do have a very constructive last day, Friday here, off the prior base pivot, oops reversal, strong close, and we'll see if we can fall through off that momentum and, break back above the 50 and eventually challenge those declining MAs, but still looks like the left-hand side of a base for me. Moving on, we've got Crowd. This is pretty similar, actually, sharp pullback into the base pivot and now forming out here like Reddit. Again, downside reversal off the 21 EMA. So how these names act when they get back to that level. And if they manage to actually pop through, that will be key to see if this rally actually has legs. Bros, definitely a name to keep an eye on, showing relative strength. You can see how many names kind of formed lower lows and key levels on Friday. This one has actually held above that 21 EMA, showing clear relative strength. It's also a recent gap up, and this gap up is occurring right near all-time highs. Great growth as well, 75% earnings growth last quarter, revenue growth up 34%, and good estimates going forward, though not quite as high growth. But just in general, in terms of the price action, which is really key here, this is acting very well considering the context of the market. So watching this clear pivot to see if we can push through this prior earnings gap low. But Bros, definitely a name to have on your radar and on your watch list. Unity, another recent gap that I'm watching, even though it has declined pretty sharply since this day 2 downside reversal, but it's holding that 10 EMA. Again, we're looking for stocks that are holding up better than the market indexes, showing relative strength, and holding above the moving averages when the market is below those moving averages is a very clear and objective way to say this stock is acting stronger than the market. And it's formed kind of a clear pivot to the top side here at these highs. So watching for a push higher and potential higher low form here if we reconfirm higher and eventually try to break out of this base once again. This doesn't have huge growth, but did have a nice turnaround quarter and broke expectations here and a very strong earnings gap on the highest volume ever. Docs, another recent earnings gap, and just in general, these earnings gaps are a great gauge of market environment and risk appetite of institutions, and these have been the ones that have been holding up better than most. But if these do break these key lows on Friday, that would suggest again a sign that the market just needs a little bit more time to work through this correction. But if we do rally from this point, these would be key names to watch because they've really shown key potential with these big moves up on large volume. So reclaim the 21 EMA, oops reversal here on Friday, and watching for reconfirmation of the upside through kind of this range that's forming above that level. Root, this is an insurance name, but it's kind of a performance enhancer, good trading stock, and it had a nice earnings gap that held and followed through on Friday and has been acting just in general phenomenally. This isn't really what I call a liquid leader. It's more of a swing trade type name, but it is acting very well and watching for a break through the top side here on Root. Then down here, I'm just kind of noting stocks that are showing relative strength and are potentially setting up. Some of these are already trending. Some of them are just showing, strength off the bottom. But in general, I'm casting a wide net and trying to see, what groups are leading, what themes are setting up within kind of the growth space that I would like to trade. LNTH is a name I've traded well in the past. This is an off the bottom move, just watching for a reclaim through the 200-day moving average. Nice push up on earnings and then tight 2 days here, acting better than the market recently and watching for confirmation of strength. A nice tight range forming right below this area. And we'll see if we can reconfirm to the upside. This is more of a Stan Weinstein off the bottom type setup than a classic can slim type base breakout. EAT, really like how this is acting. Beautiful outside day here on Friday, reclaiming that 21 EMA. Again, reclaiming the 21 EMA before the market has done so, forming a higher low at this point. This is the low, and this is the higher low against a 50-day SMA, and basically watching for more strength to the upside here on this name, which is, I think, Chili's. I'm pretty sure it's Chili's. Let me know in the comments if I'm right. I'm pretty sure this is Chili's as well, but really nice growth here in the numbers, triple digits the last 2 quarters of earnings growth, and estimates for the next quarter also triple digit, and then the next quarter after that also triple digit, which is great to see. NTNX, software name, acting well, holding this earnings gap reasonably well. I don't like the sell-off here, but this did happen on a day when the overall market was pulling in very hard. And the fact that it's held above this key low and closed well Friday, holding above this base pivot is definitely a good sign. And is one of the few software stocks that is holding up pretty well. So definitely a name to at least have on your watch list and see how it acts. Urban, this is acting really nicely. I like this gap up here. And I think I say that in the article actually. And I like how it's holding right near this base pivot and watching for a breakout through here. Specialty retail actually was one of the leading themes of the previous cycle. I don't think many people were trading them, but a lot of those names were making tremendous moves, and we'll see if Urban can continue on higher from this short base. And I like how shallow and controlled this has been, and I like this subtle gap up. I love gap ups. I don't like gap downs, and we'll see if it can reconfirm that strength. LMND, another kind of performance enhancer in the insurance space. So if you're going to be trading the insurance names, these are probably the names to be day trading or swing trading. And I'm watching this downward trend line and see if you can build out a flag a little bit more and then pop through that level. WGS, this name is acting well, holding again the 10 EMA while the market is not. This is a choppier, faster name. So that's kind of one of the unfortunate things about a lot of the names that are showing RS right now is either they're very choppy, very fast, or they're kind of a biotech insurance name that, aren't typically good traders. And this one has had a really nice move and kind of makes some really great breakouts, but it is a little bit choppy and likes to fade. You can see a lot of wicks here up here, but we've had this recent gap up, so we'll see if it can change character and actually fall through to the upside. You've got a nice clear pivot here that I'm watching as a gauge of market risk appetite. MCK, this theme, of course, pharma, healthcare, biotech has been leading. Nice breakout reconfirmation. The actual breakout was through this pivot back here against the 21 EMA, but this is McKesson and just acting really, really nicely. You can see how RMV went to 0 right before the re-breakout here on Friday. So we'll see if this can fall through, or it would be a negative if this reverses down early next week and breaks below this pivot. So that'll be a good gauge as well. LLY, this theme, pharma, has been acting really nicely. This one has been in a trend above the 21 EMA since basically when the market topped in December 18. And you can see the clear strength expectation breaker right here with the gap up after the negative close. And it's just been holding this 10 EMA throughout this entire move, and nice upside reversal off the prior consolidation pivot and 10 EMA confluence here on this past Friday. So definitely acting well and moving up the right hand side of the overall base pattern. And you can see up here where it started the relative strength phase again right near December 18 when the overall market started pulling back. Biotechs and pharma really took hold and started leading, which is always something you want to kind of keep tabs on. Excel, another biotech, breaking out of the base and trending, acting really nicely. This is, again, a smaller company. I think it's only, it's about a 10 billion company, and actually is profitable. So that's a good sign for biotech. So if you're going to trade biotechs, again, there's added risk there. A lot of them are based on FDA approvals, which are very, fickle and can happen out of nowhere. And a good FDA approval can cause the stock to sell off. And you can just wake up to a gap up of 3% down. So if you're going to, or more. So if you're going to trade these, you got to trade them smaller size, and just be aware of the instrument you're trading and the potential, both upside and downside. AMER, I don't see anybody really talking about this name. This is a recent IPO and has, formed a reversal extension down here, pushed up higher into the moving averages, and is now setting a nice pullback flag here below this downward trend line, and basically watching for a break above. And this would be a good name to keep an eye on. And again, this isn't really in the classic tech space, which I think is a positive, given the weakness that we've seen in the semiconductor AI related names as of late. Guild, this is another biotech that's just trending nicely. Not much to do here, no real entry, but just another example of how biotech has been really performing well since December 18, where it popped above here. Early buy point right in this area, up the right hand side of the base, retested the 21 EMA, earnings gap, and beautiful trend above the 10 EMA since that level. Z-Lab, another biotech acting well, big upside reversal, watching it fall through this handle pivot right there. Grinder, acting well within the space. You had a failed breakout, but then it reset near the 21 EMA. I really like this type of setup, but again, this is kind of a choppier trader, but it's in a beautiful long-term uptrend. If you take a look at the chart, had an interesting sell-off right near the IPO where it just plummeted straight down, but since then it's actually put in a really nice 200-300% move, and this is just the latest base within that move, and some nice earnings expectations going forward. Amgen, a little bit of a slower mover, but acting well recently, along with LLY. Just this theme overall is pretty strong. IDCC, setting up a pivot here, holding near the 10 EMA again when the market is not. And this is a more of a growthy type name and a good swing trade type stock. It likes to set pivots and have nice momentum moves from those areas. Spot, this has been a long-term leader, again in a very strong uptrend, and is acting really nicely right near the 21 EMA, setting up a pivot to the top side, watching for fall through to the upside through the oops reversal. AEM, miners have been acting well, good oops reversal here on Friday, so watching for a fall through and a push off the 21 EMA. MP, similarly, a nice base here, and then a short-term consolidation against the 21 EMA, and watching for fall through to the upside early next week. Uber acting well near the 21 EMA. You do have a downside reversal, but this to me is kind of the pivot, and nice action here on Friday. And this is part of a longer term kind of, I think 8-month base that you go back in history and take a look at. So this is kind of up the right hand side of both the short term base as well as a longer term weekly consolidation, which is kind of what I always like to see, and really nice triple digit growth and good expectations going forward as well. SEI, this is a smaller cap name setting up a clear pivot. Energy equipment acting well. RBRK, I put this in here. It is below the moving averages, but I like how it's held this kind of earnings gap low and this base low here, and it's setting up a kind of subtle tight range here. This to me is kind of the extension down, and we haven't really been able to progress lower from that point. We've kind of built out sideways, so I'm just watching for strength from this area. And the reason I'm looking at this is because it's a recent IPO, and those have the greatest potential. This is a prior leader that showed really strong relative strength and power trend prior. But I am aware that if it loses these low, it's probably going lower and maybe even a lot lower because it is a recent IPO. So just one to have on your radar, not necessarily kind of one of the top names I'm focused on overall. AXSM, another biotech that set up a kind of short-term flag, can have a nice one-day breakout, a good swing trade type name. And that's pretty much it. And then every day I kind of note the strongest themes currently and my overall thoughts and focus for the next day. Usually in a strong market, I'll put kind of the top 3 names that I'm focused on for a potential breakout the next day. And overall, just kind of leave my thoughts and situational awareness down here. So hopefully, TradeLab members can take advantage of that. And again, this is the last weekend where you can try a free month of the TradeLab and see for yourself if it's something that would be valuable. I've heard from a lot of traders that it saves them a ton of time on screening. And even if they have their own process, which I encourage everybody to do, they compare their results to mine, and they might miss something that I see, and then they can add that to their process. In addition, of course, again, to the daily market updates, I do educational articles on the top trading opportunities, analyzing setups like earnings gaps, how to trade them, oops reversals, case studies of top market leaders. So there's a ton of different resources available to you as a TradeLab member. And I really encourage you to at least try a free month. And there's no expectation, no need to sign up further if you don't like it, but give it a shot. You won't know if it's valuable to you if you don't give it a try. And when you sign up, you get access to all prior education that I put out there. So take advantage of the free month, give it a try, and see what you think. And you can join hundreds of traders. And again, I put my heart and soul into this. I really try hard to make it the absolute best value service out there. And I think my work speaks for itself. So definitely check it out. Again, the link is down below in the description. With that said, on the market, we'll have to see what happens next week. If we go back to the QQQ, do we progress higher? Is this kind of the bottom? We'll have to see. And even if it is the bottom, I think it could still take quite a few weeks to really work itself out, have a little bit more chop. And one thing that does kind of worry me and just something in the back of my head is, one, the Fed kind of changes tune a little bit on this day, becoming more hawkish. And then 2, there's been a lot of geopolitical factors that have been impacting things, tariffs, news events, wars, all of that. And the market is responding to that. In strong markets, the market just shakes all that off and acts extremely well. Right now, the market seems to be very sensitive to news events and negative news catalysts, and just doesn't seem quite right. So we'll have to see how things progress going forward. And what I'd be looking for really is growth stock leaders to really mature in their bases, set up nicely, new themes to develop, because right now insurance isn't going to lead us out here to higher prices. Something else has to take over, whether it's AI again or some other growth stock theme. And I'm basically watching for growth stocks to start to ignore, again, those negative catalysts, or even act well when we get a supposed negative catalyst. And also looking for them to just kind of ignore the general market in general, and start to outperform and show relative strength and start phases. So we'll see what happens. Watching for higher lows, reclaims moving averages, all of that. So that's pretty much it for my thoughts on the market. Hopefully you guys found this useful. Let me know your thoughts down below. I'd love to answer any questions you may have. And if you have any questions about the TradeLab as well, let me know down below. Again, highly encourage you to take advantage of the free month. Again, the offer ends this weekend, but you get a full month of the TradeLab if you sign up. So go ahead and do that down below. So again, thanks so much for tuning in. Go ahead and enjoy the rest of your weekend, and I'll see you guys in future videos. Take care.